Everyone, and welcome to today's webinar, QuickBooks for Small Business Owners, part one of two, getting started with QuickBooks Online. My name is Veronica Lopez. I'm the Business Counselor Manager that oversees the Pico-Union Westlake BusinessSource Center here at PACE Business Development Center. Today's webinar is being recorded, and before we get started, we're just going to do some light housekeeping. So everyone is in listening mode. You will have a chance to raise your hand perhaps at the end. But today's topic has a lot of content. So we do have a Q&A session. You can enter your questions there. You can enter the questions in the chat. We will allow some time at the end for Q&A as well, in case you'd like to raise your hand if you ask a more detailed question. Today's webinar is being recorded. All attendees will receive a copy of today's webinar. And it is posted on our e-library as well. There are slides, and those slides will be shared with attendees. We kindly ask that you complete our survey at the end of today's webinar. It helps to guide our programming for future sessions. So before we get started, just an intro for any of those who are new to the Business Development Center. On our screen there, we have been providing services since 1993, and we try to provide comprehensive small business technical assistance. The City of Los Angeles is sponsoring today's workshop as part of the Business Development Center Pico-Union Westlake region. In addition to that, we also operate we are the exclusive provider of Procure LA, which is procurement services for businesses in the City of Los Angeles. And we are also a CDFI, Community Development Financial Institution, through our for-profit arm, PACE Finance Corporation. Here's more about the services that we offer, from one-on-one counseling to entrepreneurial training to hosting webinars like today's. We also offer hiring assistance through our WorkSource Center. If you are thinking or considering hiring an employee, the WorkSource Center helps offset the cost of hiring that employee, either 3 or 6 months. If you'd like to learn more about that, please reach out to me. Here are some of our upcoming webinars, but I definitely wanted to highlight that this is part of a two-part series. So please join us back on Thursday, same time at 1 o'clock. I know it says 11 there, but 1 o'clock, and you will be hosted by my colleague, Jenny Yang. I also want to encourage you, we just started a series on with BitSadec, the nonprofit legal agency here in Los Angeles area, on the Small Business Compliance and Legal Foundation series. I encourage you to come. It will be the following week. So it's 5 legal tips every small business owner should know. And that's Wednesday, February 18th. And so with that, I'm just going to introduce our speaker before she gets started. So Lorna Whitaker is a small business consultant, profit coach, and financial skills trainer and business growth expert with more than 40 years of experience working with small business. As the owner of her own small business, she has clear and realistic expectations with just what every business owner must know so they can easily and effectively manage the financial piece of their business. She has worked with small businesses in all stages of business, from local mom and pop to international corporations, firms making 7 figures, and startups with little more than elbow grease and a drain. So with that, I would like to turn over the presentation to Lorna Whitaker.
Hi, everyone. So I'm really glad that you're here today. So thank you, Veronica, for hosting this today. We're going to be covering how to get started with QuickBooks and bookkeeping and accounting for small business owners. It's a 2-part series, as Veronica was telling you, and the next session is same time on Thursday. And this is about learning how to run your business by the numbers. It's a #1 element for successful businesses. Success is not an event, it's a result. I say this all the time. Your numbers are the compass. Financial success is the destination. I'm not going to do much about the about me because we are very content heavy for this presentation, but I must tell you that I'm a financial strategist and skills trainer. Okay, I'm an educator. I'm not a CPA. I'm not a licensed tax professional. I cannot and do not give legal or tax advice. However, these conversations come up all the time for business owners. So knowing who to ask, what to ask, those are the resources that you may need. So we want to be sure that you understand that I'm not giving you advice, I'm giving you information that you can utilize as you grow your business. So my personal experience is that the people who are making money are savvy entrepreneurs. Okay, so this is part of your education and your training, is to learn that financial piece. I'm going to show you how to transform the way you manage your businesses, manage your money, so that it's more efficient and it's easier and takes less time. I have been doing this for the past 3 decades, curating the very best of what business owners must know to thrive in their businesses. I tripled my business my second year in income, my second year in business. When I first started, I really wasn't sure what I was supposed to be doing or how to tackle it. I understood financials. I've been running other people's businesses for 30 years. So I really thought that I knew what I was doing. But making money is kind of an approach that we have to develop. And the skills that I had with the bookkeeping part of it really made it much easier for me. And I've had clients that have gone from being local startups to international contenders. I just want you to know that I have the expertise to provide you with this information, and I'm really excited to have a chance to do that. Today's presentation is about how to actually get started. Okay, I love it. Somebody asked me once this question, well, how do I get started? I said, well, you put your foot on the yellow brick road. Okay, that's how you get started. You just start making those steps forward all the time. So today we're going to talk about first things first, software considerations, terminology, bookkeeping basics, accounting basics, and best practices. You must know these things, or at least have a rudimentary understanding of them, before you even get started using any kind of software. And I'm going to give you a live demonstration on QuickBooks Online software on Thursday. But it's going to all be a language you don't understand if you don't get these first fundamental elements of what you're looking for, what to be asking, things that you're going to need to know. So we're going to get started on those today. First things first. So 81% of business owners handle their finances themselves. I think that's fantastic. I think you should be handling your finances yourself. You are only going to get a better understanding of what it takes to run your business if you're doing it yourself. However, 66% said they really wish they knew more about their finances. So again, welcome. I'm so glad that you're here today. So, rule number 1, keep it clean. Do not think that you can use your personal bank account, your personal credit card, your personal debit card to run your business. You must have a separate bank account for your business. If you're doing business in a name other than your own, okay, for me, it would be Lorna Whitaker, I can open a personal bank account in that name. I can get a debit card for that, and I can get a credit card in my name. Now, that may not be sufficient for your business. A business checking account offers more services that business owners need. I do caution you about using smaller banks and credit unions that don't offer enough services for a growing business. You might be able to start with them if you already have a relationship with them. However, most of them are not designed to handle businesses. You want a bank that understands and expects to work for and with business financial matters. Okay. Now, if you can't get a credit card in your business's name, maybe you're relatively new, it's fine to get a business card, credit card in your personal name if you use it almost exclusively for your business. So have a business checking account and a business credit card, meaning that they are specifically for the use of your business. Do not commingle your personal and business money. The IRS may give you some forgiveness the first couple of years in business. After that, they're not going to be very user-friendly for you. So let's talk about software. Okay. Now, I want you to know that we're going to be talking about and training on QuickBooks Online. There are other options, okay? So, and you can go to the link down there at the bottom. It'll show you where you can get more information about the pricing. Their pricing changes. Please note that for the first 3 months, QuickBooks always offers a really nice, healthy discount. And you can see it's in bright bold. And then the monthly charge is little tiny light print. And I have shown you what the annual fee for that software would actually look like for you paying full price. Simple start for most businesses is not going to work for you for very long. And I don't even recommend that you start with that plan because it just doesn't provide enough support. You might as well start with a plan that you can grow into. I'm a firm believer of learning to take this in baby steps, one piece at a time, learning it and getting really familiar. The QuickBooks Online Plus is a customer favorite because it offers a good price and almost all of the things that a business will need. You have to look at the options that are being offered to see whether you need the more advanced versions. Okay. And they will help you get it set up and they will do a lot for you. But remember, they're technicians. And while they may say that they're bookkeepers and that they understand it, they may or they may not, depending on who you actually talk to. This is about you learning how to do this for yourself. And so once you're set up, and you can have a bookkeeper set you up with some of the aspects that you need, but generally the first initial setup will be very sufficient for you. And then you can grow into it knowing that you can change it. QuickBooks Online is user-friendly. It links up to your bank accounts lovely. It keeps things current, but you have to stay on top of it. You have to do it regularly. Now, we're not talking about QuickBooks Enterprise or Desktop any longer, mostly because they sunsetted it, meaning they're no longer offering their affordable desktop version. They're now wanting a much higher premium type of software. QuickBooks is powerful. The desktop version is wonderful depending on what your needs are, but I find that most business owners find that the online versions really can get the job done for them. So I want you to know that desktop is still available if you want the bigger packages, more advanced companies, construction companies, maybe things like that. The desktop is available, but you can see that it has a pretty high price point. I have created a free ebook for you. It's a guide to bookkeeping and accounting software. It gives you some ideas of what other options might be out there. Wave, Zoho, Xero, those are all offering various things. That Wave has really come a long way to allow for invoicing. Zoho was always set up to do that. Xero is a strong competitor for QuickBooks. The disadvantages to those softwares is that there are fewer people that know how to use them that could give you some support on them. And you have to ask their representatives to help you with that. And some of the CPAs are not actually available to integrate with those because QuickBooks has been around a long time and has really begun to dominate the field. I do want to make this is more of a personal choice. Okay. Lots of people say that they use Quicken. Quicken was never designed to be for businesses. It has a tendency to commingle personal and business stuff. And it's just really an insufficient platform for running business finances. And I actually say that you should plan on outgrowing it. So why not get started with a software that you can grow into instead of having to spend that time migrating your data over to a different program. Okay, terminology. All right, let's get some terms out in front of you. So bookkeeping and accounting are different terms. They mean different things. Okay, bookkeeping, That tracks the transactional detail of a business, and it must be accurate for it to be useful. And I'm going to give you some tools to make sure that that happens for you. Okay, so bookkeeping is the recording of the information. Okay, accounting is how to read the information. It's the big picture view, the CFO part for a business, Chief Financial Officer. Every one of you is the Chief Financial Officer for your business. You are now and always will be. Never let somebody else know more about your financial health than you do. Okay? So your transactions are going to show you what is really happening in your business. Okay? Cash flow, profitability, liabilities, all of those things that you're going to look at those so that you can make informed decisions about what steps to take and when to take them. Folks, it's not about working harder. It's about knowing what to fix. And when you keep your bookkeeping up and you keep on top of reading your accounting and financial statements, you're going to have that information. And this is always going to be true. If you put garbage in, you're going to get garbage out. So we're going to go over the things that are going to help you get clean, clear information so that you can run your business by the numbers. People ask this all the time. Well, what's the difference between accrual and cash basis accounting? So accrual basis tracks the transactions by the amounts paid, amounts due, that's accounts receivable, okay, and amount due to others, accounts payable. This is what the business owner needs to know in order to know whether they're truly profitable. They want to know about their pricing. It helps them with all sorts of aspects. However, the reason that a lot of you may not be familiar with using accrual basis accounting is because most small businesses are taxed on a cash basis. Cash basis is what you actually paid and what you actually received. And that's what your taxes are done on. And frankly, it's one of the things that is most important to the business owner. How much did I spend? How much did I make? How much do I have left? So cash basis accounting is the one that they're most familiar with and that they feel is the most relevant to them. But for running a business by the numbers, you're going to want to be able to do accrual basis account review. So here's some more terms. Revenue. One of the things that confuses business owners is the mixing of using different words to mean the same thing. Okay. Revenue. Okay. Revenue is your income coming in. Sales. Well, that's also revenue coming in, but you may have different terms. So it's always the income from the goods and services that you sell. Okay. So revenue, sales, income, they all mean the same thing pretty much. Now, as your business grows, you may have conversations about sales. Maybe sales to you means how many customers did we have? How many invoices did we write? Okay. So you want to really start having a language that helps you to go, what am I actually talking about? When your CPA is talking, when a business consultant is talking to you, when you're talking to the bank, what terms are they using? Make sure that you guys are talking about the same thing, despite the word that you're using. So just want you to know that sometimes the words get used in different ways to mean different things, and they can all also mean all the same thing. Okay. Gross profit. Gross profit is the revenue less the cost of goods sold. Shorthand is COGS. Okay. Now, if you don't have costs of goods sold, all right, well, then your gross profit is going to be the same as your income, your revenue. One of the things that I like people to do is to think about the merchant fees. If people are paying you with debit or credit cards, you're paying merchant fees. You only encounter them when you make a sale and somebody uses a card of some kind. That those can be put in your COGS, and it's useful for you to keep them there rather than under bank service fees, because it helps you to really see how much it's costing you to make your income. So I'm going to say that nearly every business today is going to have at least one cost of goods. They're going to have merchant service fees, but you might have others if you have inventory or you pay for things in advance for your customers. So there's lots of variables. Gross profit is just the difference between revenue and your cost of goods. Net profit or net income, okay, that is what's left after all the expenses are subtracted from the gross profit, okay, or the sales if you don't have gross profit. Profit margin is a little more advanced language. I just want to give it to you so that you have it, so that you can start going, oh, you know what, I think I've heard that before. What is that one? Profit margin is the net profit as a percentage of your revenue. And this is the one that you will use to do a more advanced analysis. But I want you to know that people talk about profit margin all the time. It's useful for pricing. It's useful for managing your expenses. It's useful for growing your income. The thing is that it can be a big significant factor that you want to pay attention to, and it can mean absolutely nothing, because depending on where you at and the kind of business you have depends on whether you're going to do much with profit margin. But I wanted to give you the word so that you started understanding some of the terminology. People say, well, what is a chart of accounts? This is a chart of accounts. We're going to be doing more work with this today because of its real importance for actually doing bookkeeping. The software is something you can learn. You will struggle to do it well if you do not understand the chart of accounts and everything that where stuff belongs. Okay, so on the balance sheet side, we have assets, liabilities, and owner's equity. And we're going to do a little more with that. And then we have the profit and loss, which most of you will have some good understanding about: revenue, income, costs of goods, and expenses. Now, I've used some very standard names for the chart of accounts. And when you first get set up on QuickBooks, they will ask you some things about your business, and then they will give you a chart of accounts that's in good alignment with the kind and type of business that you're in. These names can, for most of them, be changed so that they are meaningful to you. So let's look under revenue. Let's say I'm doing a landscaping. Maybe I have revenue that would be the mowing and blowing, the guys that come in and cut your grass, okay, and blow the leaves off of your driveway. Okay, that might be one type of service that I sell. Maybe I also sell a product. Maybe I sell fertilizers or pavers or something like that. Well, then I'm going to have those. You can have as many or as few categories, accounts, as you like in any one of these categories. The more you have, the more complex your business will become, more likely you are to make mistakes. So I encourage you to start simply, or be really clear of where you want this information to go and what information you as a business owner want to see and to measure. Sales, what kind of sales are doing well? What part of my business is doing well? What is proving to be the most expensive for me? Where am I at with that? For example, under expenses, there's advertising and marketing. And the tax forms, you can put everything all lumped together, advertising and marketing. However, today's businesses regularly have a lot of expense on their website and social media. I would absolutely have those other categories so I could see what I'm spending there so that I can measure where my revenue is coming from. Why? Because if I want to make more sales, I can spend more money on my advertising that is actually making a difference for me. And you won't know that if you can't run reports. Okay, if you can't run them, read them, and pull this information out of your bookkeeping in order to figure out what's your business doing. This is running your business by the numbers. A subjective feeling that something's wrong with your business may be, say, hey, I need to pay attention. But you won't know unless you actually have something more tangible, objective measures to find out how your business is doing. So I'm just going to give you a quick overview here, balance sheet terminology, so that you can understand how the balance sheet works. Assets, what you own, cash on hand, accounts receivable. Liabilities, what you owe, equals owner's equity. And people are always confused by what owner's equity is. Opening equity, the value of something when you just started your business, owner's contributions, how much money you put in, owner's draws, how much money you take out, and retained earnings. This is the retained net income for the life of your business from day one. The balance sheet measures everything, unless you tell it a certain time window, it measures everything from day one. And it should be run in an accrual basis for it to be accurate. You can do cash basis. QuickBooks Online is great about that. You can do cash basis, see what happened last year, okay, if you want to look at it more in a more refined window. Profit and loss terminology. So again, this is the one most business owners are familiar with, okay? Income, what you get paid for what you do. This is not refunds. A refund is not money that you made, okay? A refund reduces expenses. Income is the money you get paid for what you do or sell. COGS, direct costs for what it takes for getting paid. The IRS is pretty lax about this. They don't really care if you put some of your labor up here, contractor labor or employee labor, merchant fees, whatever. If it's useful for you to have it as a cost of goods, that's great. No problem there. Okay. Then you have your gross profit, income and revenue, your expenses, what it costs you to run your business, whether you make money or not. The supporting your web hosting, your janitorial, your workers' comp, all of these things, whether you make money or not. And then you get your net profit or income. This is a taxable number. Okay. Bookkeeping basics. Okay. So this is something that is really near and dear to my heart. Okay. Excuse me. These are the building blocks of money. When I started my business, I understood these. What I have found is that most business owners don't. They do not understand how the 6 building blocks work. And because they don't understand it, when they're doing their bookkeeping, they put the things in the wrong place. And then their reports are wrong, and they make it really hard to measure the financial health of your business. So these building blocks are the foundation upon which you will build your financial house. And here you're seeing these same terms again. So these are on the chart of accounts. On the balance sheet, you have the assets, liabilities, and equity. On the profit and loss side, you have income, cost of goods, and expenses. Now, if you'll remember the things that I just mentioned about these things, about assets being what you own, liabilities being what you owe, equity being the difference between, income, what you make for doing your products or services, costs of goods sold, and expenses. Sometimes I find that I tell my clients, look, if you don't know for sure what it is, maybe you can lean into what it isn't. Okay? What it isn't. So if you know that it's not income, well, then what is it? Okay. And there's lots of really good AI resources for you online. You have got to know this stuff. I'm not going to spend a lot of time going through what all the individual items are. These are more examples. However, assets, something belonging to you, cash, inventory, furniture, equipment. Okay. Assets. Liabilities, something you owe, a debt of any kind, bills that you have not yet paid for, a loan that you have, credit card debt, okay, a vehicle purchase, which can be an asset and a liability. So the vehicle has an asset value, but I also owe money on it. And that's a really good way to explain what the next one is when we talk about equity, the difference between what you own and what you owe. So for most people, you can relate to either a home or a vehicle. I buy a vehicle. The vehicle is $20,000. I put $5,000 down. Okay, that came out of my cash. Okay, I put $5,000 down, but I owe $15,000. Okay, if the truck is worth as an asset $20,000 and I owe $15,000 on it, the equity is the $5,000. Okay, so start thinking in terms of what equity is. Now, Owner's contributions. Owner's contribution, if you put money into your business, you take it out of your personal pocket and you put it into your business, okay? It is not income. It does not belong there. If you put it into income, you create a taxable event. Do not do that. Money you take out of your pocket and you put it into your business is not income. A loan that you receive, if they give you money, okay, and you put it into your bank account, it comes from that loan, that liability, okay, that you owe. It is not income. Very, very important. And the reason I make such a big point about this is that a lot of the software talks about an owner's draw, and a lot of business owners understand what an owner's draw is. They don't always let you know that an owner's contribution is also an equity act. So people go, oh yeah, I just took some money out of my business. It's a shareholder's draw, it's an owner's draw, whatever. The thing is that the money that you put into your business is also an owner's equity action. Okay. And I find a lot of business owners never have had this conversation before. So I make a big point about this. And again, your retained net earnings. Income. Again, you guys, most of you know this. What you get paid for what you do or sell. Okay. Now, please note that I have included sales returns and allowances. And the reason for that is that actually reduces your income. It's not treated the same way as an expense. If somebody returns something, you're just saying, oh, I didn't make that sale, and just put it back in. And so it reduces your income. So you will always have a refund account or a credit account or maybe even a bounce check account, because those reduce your income. Okay. Cost of goods sold. Again, IRS is not particular about what you put into this category. It should make sense that you have done it. So it's the costs or expenses directly tied to your income. So inventory that you buy and sell, okay, that's going to be a cost of goods sold. Let's say you have some direct contract labor that you're paying for. Maybe you have some direct employee labor that you want to keep track of under costs of goods sold so that you can really differentiate your pricing. But part of your overhead might be somebody who answers the phone or something like that for you, okay? And then merchant service fees, which I covered before. Okay, expenses. Again, this can be really expansive or very narrow depending on what kind of business that you have and how long you've been in business. A lot of these areas can be added to you. Say, you know what, I'd really like to track this better. And you can add a chart of accounts. You can remove a chart of accounts. There's lots of things that you can pull out of these accounts, okay? So expenses, what it costs to run your business, whether you make money or not. That's overhead. Those are expenses. They're deductible. Okay, that means that you can deduct them off of your taxes. So only things that are deductible are on the expense side. If you're making a payment on a loan for a truck or another money loan, the thing is that payment is not deductible. Okay, the interest is, but the payment itself is not. So again, this is something that you're going to have to get refined and to have a better understanding is because if you're paying back a loan, it's not an expense to your company. It does not reduce your taxes. And this is really just a much more expanded list of the kinds of things that you might want to see. Am I going to have this? And when you're in an early stage of your business, you might go, am I going to have to add this expense? I'm not doing it now, but will I need to? So I can plan for that or do some projections. And we have other classes on that. Okay. So accounting basics. How do I actually understand this information? So if bookkeeping is the foundation upon which my financial future is built, knowledge is the gatekeeper, folks. Knowledge is the gatekeeper. So let's take a look at this. So this is a profit and loss done in an accrual basis. It's tracking all of my sales, okay, in total, whether I have been paid yet for them or not. Total sales less the cost of goods. Okay, so then I go into, you can see my gross profit, and then I have my expenses. So this is in the expenses. I may be posting things to accounts payable. Okay, I'm posting bills to accounts payable. A lot of businesses do not do that. They just leave them on their desk and they pay them when they can. If you're going to run your business by the numbers, it's much, much better to post the bills so that when you're doing your accrual basis review, you can actually see, am I still in a profitable business if I pay everything that I have to pay, everything that is owed? Okay. Am I still profitable? This is accrual basis. This number is not taxable. Again, most small businesses are taxed as a cash basis, okay? However, we run our businesses both from cash basis and accrual basis accounting. So we're going to look at them back and forth. Okay, so accrual basis, this is not a taxable event for, I'm going to say 99.999% of all businesses. Only the very, very largest businesses are taxed as an accrual basis tax. So not taxable for probably all of you. Okay, accrual basis. So, well, then what do I want to know from cash basis? How is that different? So what I did is I gave you some examples of how it might look differently in a cash basis business. So I'm invoicing for the repair services. Let's say they just pay me on the spot. But when I sell the equipment, I'm only getting paid for some of it. I've only been paid part of it. I still have $3,000 owed to me, which I will see on my balance sheet, and that's still sitting in accounts receivable. I still am owed $3,000. So the total cash sales as of this report is $57,000. The cost of goods, I get to subtract them right now, even if I haven't been paid for the sale. I still can record the cost of goods sold. And now I have a gross profit. This is my gross profit number. This is all the money that I have right now, cash in hand, that I can use to pay for expenses. So in my example, under insurance, I said I elected to pay half my insurance now. I paid $400, and then I paid another $400 is still in accounts payable that I still am owed, have to pay. The other stuff has all been paid. And so my total expenses are $18,950 for a net profit of $20,050. Now, if this was on the last day of the year, this number is now taxable. This is an important number to know. Now, if you're a corporation, an S corporation, or an LLC being taxed as a corporation, this number is going to pass through to your personal tax account. So it's not taxable necessarily for you as a corporation. If you're a sole proprietor or a single member LLC, this number right here is going to be taxable, and it could be taxable to greater than 15%. So if you take 20% of this and you subtract that away, do you still have enough money to live on? That's how you do that analysis. Do I still have enough money for me and to run my business? Okay, now I want to make another point here about wages. If you're a single member LLC or a sole proprietor, these wages do not apply to you. You must take your money out by way of an owner's draw. You cannot be on the payroll as a single member LLC or as a sole proprietor. These wages would only apply to your employees. However, if you're a corporation, okay, or an LLC taxed as a corporation, your wages can be included in the wages category. However, I encourage you to have a separate account for officers' salary. I really encourage you to do that so you can always see how much you're paying yourself and how much you're paying your other employees. Why? So you know how to hire another employee if you need that, so you can figure out what the cost is for you for that. Balance sheet. I have discovered that most business owners know little to nothing about their balance sheet. Their CPAs have figured out that, well, they don't want to know about it. They don't care. It's not relevant for their business. And I'm going to say that's not true. Understand your balance sheet. Why? Well, let's talk about where to look. Where do I want to look? Well, how much cash do I have in the bank? Good thing to know. Okay. According to my books, this is how much I have in the bank. It accounts for checks that I have written that maybe have not cleared the cash in the bank yet. So if you've sent ACH payments and things like that, the bank will show that. But if you've written checks and you've mailed the check, your bank account may not know it yet, but your books should. So how much cash do I have? Who owes me money? Don't let this get too old. You want to know, is it 30 days old? Is it 90 days old? If it gets too old, you may never collect it. So what do I have in my accounts receivable? If I need money, that would be a place for me to go to find out. Accounts payable. What do I owe? How much do I owe? Who do I owe it to? If I owe for my inventory and I need inventory, I may not be able to buy more inventory. Okay? I may not be able to buy it because I haven't paid it. So pay attention to these. And then owner's draw. Again, if you're a sole proprietor, this is where your money comes out of. If you're a corporation and an LLC taxed as a corporation, you can still take an owner's draw. You don't have to run everything through your payroll, and your CPA will guide you on what that number should look like so you can maximize the tax benefits that comes from being an S corporation or an LLC taxed as a corporation. Okay, best practices. All right, use accounting software. Okay. People do no longer have the training or the skills to do it by hand. Businesses are complex. Okay, use accounting software. Use one that fits your needs. It's not too big, not too little. Use accounting software and learn how to use it. Set up a bookkeeping protocol and stick with it. By that I mean, what day will you do your bookkeeping? How often will you do it? Okay, set up a bookkeeping protocol and stick with it. I know that it's kind of like making a New Year's resolution to exercise more and go to the gym more. The consequences are, yeah, we are not our best fit self. Bookkeeping, it'll reach around and it'll slap you because you won't have the information when you need it. You'll get behind and you'll get further behind. And then you need a loan and then you don't have the information. And now you can't read the information and you don't know what the financial health of your business is. And you feel overwhelmed and you can feel afraid and you can feel anxious. So get a bookkeeping protocol and do your very, very best to stick with it. If you get behind on your bookkeeping, get it caught up. If you find that you're struggling with the software, get help. If you find that you're just not doing it, carve out a time and make it a priority every single week as a minimum. Okay. If you need to do it every day, then do it every day. Maybe you have priorities first thing in the morning, do them, and then do this second. But this bookkeeping has got to be a priority until it's streamlined, simple, and easy to do. Because as you practice it, you'll get faster at it. You'll get more efficient. You will end up going, oh, that's done. I can go do other things today. Reconcile your bank statements, payment services, and credit accounts monthly. Reconcile them. Even though QuickBooks Online is very, very efficient at getting all this information through. I did have a bank recently that just changed their protocol, and now all of a sudden, all of their credit card transactional detail stopped coming through to QuickBooks Online. And I have, as of yet, not been able to reestablish it. Why? Because it's a small bank that doesn't offer business services. Okay, and that's where the problem is. And we have spent a lot of time on the phone, the owner and I, trying to resolve this. So we wouldn't have discovered it if we hadn't been reconciling the bank accounts. Okay, I inherited the file from another bookkeeper, and she had completely missed that this one credit card was no longer feeding into the QuickBooks Online. Keep commingling to a minimum. Yeah, you're occasionally going to use your debit card or your credit card for a personal expense. Okay, there's a lot of forgiveness there. Just work on it and be sure that you're posting it as a personal draw from your company, because it was not for your company. It was for you as an individual. Learn bookkeeping basics for yourself. You are the CFO, and you are always always responsible for the accuracy of your books and the financial health of your business. Even if you have a bookkeeper, you're responsible. If you owe taxes because you made a mistake, it isn't your bookkeeper that's going to pay them. You're going to pay them. So you want to be able to be sure that your information is accurate for tax purposes. But for you, you absolutely want to know this information is accurate so that you can run your business by the numbers and drive your success however you define that to be. If your bookkeeping is more than you can do or will do, hire help. And I'm going to add another word in there. Hire competent help. All right. Ask around. Who do they like? Learn this stuff. Look at your reports. Look to see if the accounts are being reconciled. You're still responsible for it, even if someone else is doing it for you. This is why it's so important that I think that you learn how to do it in the beginning so that when you do hire help, you'll know what to expect and what things should look like and whether they're being taken care of effectively. If you're a small business or startup, monthly bookkeeping should be enough. Frankly, it can be enough. You learn it. It doesn't take a lot. If you have 10, 12 transactions, not a big deal. If you've had 500 transactions, you better be doing it a whole lot more often than monthly, okay? Instead, focus on the revenue and delivery of services and goods daily. If you're not having to do your books daily, work on what makes you money every single day. I call it being revenue relevant. Now, sending out invoices is revenue relevant, okay? Doing your bookkeeping is revenue relevant. But I do want you to say, I need to be making money. Where should I be spending my time? Don't ignore your bookkeeping entirely. Know that if you're small and you don't have a lot of demands, you can do it once a month. You don't have to be anxious about that. However, if you're a more established business and you're struggling with cash flow or struggling with cash flow, do your bookkeeping weekly. Okay, weekly should be completely adequate. All right. So if cash flow is problematic, use a weekly cash flow dashboard, and that's part of another training. I just want you to know that it's a way of saying how much cash do I have on hand, what do I owe, and just do it on a weekly basis. You know, if I do have a payroll coming or something like that, that's the shorthand version. Bookkeeping is not particularly hard, but it does take consistency. It does take some skills. You will need to learn them. They are all completely learnable. Okay, so I just want you to know, and I'm not dismissing the challenges that you may face when you're not familiar with bookkeeping, but it's not a conversation about math. Okay, the books will do the math. It's the software does the math for you. If you put the information in the right place, you will get the right answers. Okay, if you have an in-house or third-party bookkeeper, be sure that you receive timely reports based on your needs. If they're not giving you reports, they can't produce the reports, something's wrong. Fix it. Be sure to review your bank statements and accounting software for compliance every few months. Okay, this is if you have an in-house or third-party bookkeeper. It's still your responsibility. If you think you might forget, put getting your reports on your calendar so you can review them no less than monthly. Require that they produce the reports. If they don't give you the reports, okay, tell them to give you the reports. Make this something that you're committed to. Financial savvy is learned. Okay, none of us was born knowing this stuff, and it is stuff we really need to know. Low financial literacy skills cost small business owners an average of $118,000 in lost profits. Now, this could be in 1 year, it could be in 5 years. Nobody can afford to lose that kind of money. And once it's gone, it's gone. You don't have those opportunities to make that back up. Okay, on Thursday, we're going to do a live demo. Okay, we're going to go into QuickBooks Online. You'll see at the bottom, and you're going to have the slide deck very quickly. I'm going to get it over to Veronica, and she's going to get it to you. But there is a test drive. You just type it in, QBO test drive. You just want to be sure that you're grabbing the one for the United States. Otherwise, it'll come through in a different denomination. They're a little harder to figure out. So we're going to do how to navigate it. Okay, where the menus are, where the buttons are, where you're looking for things, so you get familiar with it. We're going to talk a little bit about how to get paid, very important, invoicing, those kinds of things, how to record payments, and deposits, what's required, how QuickBooks thinks, what it requires for you to do, how to pay bills, how to manage all of that, and then some best practices for you. So we're going to cover that on Thursday. Again, it'll be just about another hour presentation of getting you familiar with how to navigate this stuff. I'm going to tell you that it is like walking into a store you've never been in before, whether it's a Marshall's or whether it's a grocery store or whether it's a big Home Depot or Lowe's or something like that. You have to kind of know what it is you're looking for. Otherwise, you're just wandering around the store going, I can't find this. There is help for you. The thing is that when you know what you're looking for and the terminology, you're going to be able to find it more easily and readily. And when you practice it, you're going to know exactly where it is, and it's going to start saving you some really big time. Effective bookkeeping will improve your financial health. It'll protect your business from theft or costly mistakes. It'll provide reliable data for making informed decisions, create financial predictability, okay, help you budget and manage cash, allow you to plan for and measure results, make tax season easier and help you keep more of what you make, and save you time. This is why we do bookkeeping. What is the reward for doing bookkeeping? All of these things are the reward for doing your bookkeeping. If you want to have a financial future, if you want financial success, if you need your business to provide that for you, do your bookkeeping. I have a little free gift for you. You're welcome to it. I did put it in the chat earlier, and I'll put it back in here. So I have an Entrepreneur's Guide to Financial Freedom. And if you use the if you use this e-code book 10, it should allow you to check out for free. Okay. And if you have any trouble with that, my email is right there and you can email me. And I know this was fast and furious. I know it's a lot of content to slam at you, but you have access to the recording. You can have some questions, and we're happy to provide you with the support and information that you need. So what can I do for you today? What questions would you like to ask?
Okay, so our first question is, and I'm just going to answer this. The person asked if we use the same link for Thursday's webinar. Yes, that's correct. You'll receive a reminder, but it is the same website. I'm going to go from the most recent. I think it'll just make sense. Question. So what are your thoughts on using Zelle to pay for things and people?
Say again.
The person asked, what are your thoughts on using Zelle to pay things and people and pay for
It's
things?
fine. It's fine. I mean, you have to, of course, be careful that you know who they are and that sort of thing, and have them confirm their payment site, because once it's sent, it's sent. The thing is that you will still document it in your books. It is the only downside to Zelle would be is that people get comfortable and complacent and they don't get invoices, or they don't well document it. If you're doing a lot of it and you're not careful about identifying who the vendor is, you may be overpaying and not doing 1099s. So you want to be sure that if they're going to be a 1099 contractor, which means you pay them $600 or more a year for services, that you're still doing your compliance part on tracking them within your books so that you can send them a 1099. Okay, because the Zelle doesn't do that for you. You have to do that yourself. Okay, it was a great question. As long as you're careful with it, because once the cash is gone, it's gone. You can't stop the payment. There's nothing you can do about it. But you also have to track it and report any 1099 contractors. That's on you. And so as long as you're doing that, you should not have any problems with it. Great question.
Next question is, QB can be used for business and personal in the same QB program?
It can. I don't recommend it. Okay. Quicken thought that it was okay to do that. And so that's kind of what they were doing, is they were allowing people to set up both of the accounts. If in QuickBooks Online, you have to pay for a separate subscription to keep a personal set of books and a business set of books. So you'd have to have two subscriptions, which is one of the objections people have to QuickBooks Online. I would never commingle my personal bank accounts and my business bank accounts into one QuickBooks Online software because it gets too hard to keep it clean. And then if you don't keep it clean and you cannot accurately prove that you have been careful with the information, the IRS could disallow all of your or a large part of your expenses and increase your taxable burden. And so don't get, all I can say is don't get sloppy about it. Don't get careless about it. I would pick up that extra cost of the separate subscription if you want to run a personal. You may have another business or other personal revenues that you want to keep track of. I would have two separate accounts for that. So don't commingle stuff. It's just really can become problematic. Okay, great question.
Do you recommend using QuickBooks to process your payroll?
I do not. I do not. So processing it yourself, even if you have an in-house bookkeeper, requires someone with experience of filing the reports on time, paying the taxes on time. So QuickBooks offers a payroll software. It's an overlay. It's just an extra service that they provide, and you can do it yourself in-house. Absolutely, you can. But most business owners do not have the expertise to carefully run it and manage it. And I have found lots of businesses who've gotten into some serious mischief. I recommend that you actually use a payroll service like Gusto or payroll. QuickBooks has one. It's a payroll service. ADP or Sure Payroll, one of those other services where they take the entire amount of the payroll, okay? They pay all the taxes, they prepare and submit all of the reports. They make it easy for you to run your W-2s and maybe even your 1099s. That make it easier and more affordable for you to do those things. And they keep it clean, they keep it current, and they help protect you from expensive mistakes. Badly run payroll gets very, very expensive. The cleanup, the taxes that you've missed, the penalties and such, I mean, they can be very pricey. So no, I do not recommend, unless you're experienced and can run a payroll and know all the ins and outs of it, or you are assured that the person you're hiring has that level of experience. For most businesses, I say use a payroll service where they handle it all and they take all the responsibility for it, paying things on time, the taxes, everything. So great question. Thank you for asking that.
Okay. We have one question, but the person asked about contact info and pricing. Jasmine, are you asking for the QuickBooks or are you asking about Larna does private practice? I'm not sure if you're asking one or the other, but we'll just move ahead to the next question. Do you recommend having one credit card and using that for all business expenses for simplicity?
For simplicity, yes. However, I actually have two. I have one in my wallet that I keep with me for when I'm out and about, okay? And I have one on my desk. So I have two. I have one that's always available to me if I'm purchasing something for my business and I happen to be at my computer and buying something like that. I have one with me in person so that I can use it. And I for my debit cards, I have one for my personal account and I have one for my business account. And I don't get them mixed up. I know exactly which one I'm using. Sure, occasionally you might elect to purchase something with your business card, but you know that you did it and you can record it accordingly. But yes, if you definitely need at least one card for your business because you're going to need that card, and you'll have a debit card also tied to your business bank account.
Okay, thank you. We have a question. Can a small business with inventory to sell use cash accounting basis?
Yes and no. Okay. So yes, when you sell the inventory, it's there on it's going to be recorded as an asset, which makes it's going to be basically that's the accrual side. Okay, you're holding your inventory as an asset. Okay, and then when you sell it, it moves over onto your profit and loss report, and that's where it becomes cash basis. However, I also have seen businesses, and this one is more specified. Let's say I had a client that's a bakery. All of their costs of goods, okay, all of their costs of goods, they spent immediately. They were perishable. So everything was actually not kept in inventory. It was just run through cost of goods on a cash basis. So the thing is that so accounts payable, if you still owe for your inventory, that becomes a different conversation. So the question cannot be answered simply. So it's a yes and no. You're going to be managing it in both ways. I don't think there's any way around it, but it might be different depending on the kind of business that you have. So so the answer that one of my favorite CPAs always says, well, it depends. Mm-hmm. She always said that. She goes, well, it depends. Yeah. So it depends on the kind of business that you have and what it is that you need to know in a report. So maybe. Okay.
Yeah. I would recommend just meeting with a professional and doing a deep dive just so you get the correct answer for that person.
And design it for your business. Right. Design. I'm a huge advocate for designing for your business. So get the help that you need to get the answer that you can dial in just for your business. Okay.
Okay. So we are actually past time. So I do want to check in with Lorna. Are you okay with answering a few more questions? There are
a couple with answering a few more questions.
There are a few people that the questions are related to the actual interface, the dashboard. For example, one question is about migration, the difference between desktop and online. I don't want to address those because we are going to be covering the actual demo on Thursday. So those two people, we'll check back on Thursday to answer those questions. And I'll just make sure that Jenny Yang, my colleague, she gets those questions. Just make sure they get answered. But in the interest of time, there are two questions that have to do with the QuickBooks software. So the question is, what if the loan is taken out by the company, a corporation or LLC, not the individual? I guess, where does it go on the expense side? I guess where it gets reflected. Yeah.
Good. Okay. Let's see if I can answer this careful for you. Okay. The loan is a liability. Okay. So it's not on the expense side. A loan is not an expense to the company. It's a liability to the company. You owe that money. It's not an expense. So if those were the words you're using, then yeah, so that's it. It gets recorded on the liabilities side. So let's say you take a loan for cash. Let's say you get a loan for $100,000. Well, the $100,000 goes into your bank account, okay? And then the loan itself goes as a loan payable under liabilities. So double entry bookkeeping says $100,000 into cash, $100,000 into liabilities. And as you can see, those things only happened on the balance sheet side. Now, when you pay interest, and some people do it once a year, but the interest is an expense. So it actually increases the liability and it shows up on the expense side. So it's on the balance sheet and it's on the profit and loss side under expenses. That's the simplest version I can give you for that. When you actually begin to touch those different places and try to record it, it'll start making more sense. And so that's how it works. A loan, but basically a loan is not an expense to the company. Only the interest is.
Someone had a follow-up question related to that. Is a loan the only instance where that will happen or when that will happen?
No. If you purchase a vehicle, the vehicle becomes an asset on the balance sheet side, okay? The money that you might pay down for it comes out of your bank account, so it comes out of the asset side, okay? And then it comes out of the assets. It also goes into assets, and if you owe money on it, it becomes a liability. And so when you pay for that vehicle, okay, that money that you're paying for it, let's say you're paying $1,000 a month, that is only reducing the liability. Okay, it's only reducing the liability. The interest is the only part that reduces your income as an expense. So these are great questions. They're a little more complicated in their answers because all I'm doing is introducing you to the thought process. That's why the 6 building blocks become so important, that you begin to understand them, because that's all there is, just 6. So if it goes here, it goes here. Okay, if it goes here, it goes here. Okay, maybe it goes here and here. Maybe there's a couple of extra entries. And once it starts getting more complex, you'll deal with each one at a time. Some of them are super simple. Okay, some of them are super simple, but because the things overlap and cross back and forth sometimes, it can be confusing for you in the beginning. And I'm going to say that in the beginning, it might feel confusing and overwhelming. However, if you spend a little time, one of the things I absolutely love in working with people is that aha moment when I see their face light up and they go, "Oh my God, I got it." I went, "Yes, yes, you got it. You got it." I've had them go, "Well, that wasn't a cost of goods, was it?" I go, "No, it wasn't. What was it?" She goes, "Well, that was income." I said, "Yeah, you got it in the wrong place, didn't you?" She goes, "Yeah, makes a difference, doesn't it?" I go, "Yeah, it does. It makes a difference." So, you know, those light bulbs will start going off, and for me, it's really exciting when it begins to happen. So be patient with yourself, give yourself a little time on this. When you're still new to this, you will continue to learn. The resources are out there. QuickBooks will help you to learn it more, and you'll keep refining it, and then you'll look at your reports, and the reports will start talking to you. I say, numbers talk to me. You'll start looking at the numbers, you go, "That doesn't seem right." And then you check into it and you go, "Oh, I made a mistake. Fix it." And that's why QuickBooks is so great. You go, double click, fix it, done. Okay. Anything else? I got maybe a
Yes.
couple more minutes.
Okay. One question, a person asked, well, I think you can write maybe a general answer, but the person owns a childcare business and they want to know if the business should be accrual or base,
Chances are
yeah,
you'll be almost entirely cash
or
basis.
cash basis, yeah.
You'll be almost entirely cash basis. I did see the question that was being asked. I want to just go back and revisit the one about the loan. Okay.
Oh, okay, that's fine.
Okay. So here's it says, if a loan is taken on a personal account, can the interest be deducted? So yes, the interest can be deducted because almost every single loan a business takes is in your name alone. Even if you're a corporation, they will look to you to pay for it. What you do is you take and you create that loan as an account on your chart of accounts in your QuickBooks so that you can keep track of it there. I just wanted to make sure that that people understood that the thing about loans is that almost every loan you will take is a personal. Even if it's on a personal account, you can keep track of it in your books so that you know that you're paying it down and that it is a liability of your business, that you're declaring it a liability of your business, like your debit card or your credit card that's in your personal name. You can add it to your business and say, "This is my business credit card," even if it's in your name only. Hope that
Uh,
helps.
yes. And then someone asked if you can share a promo code for QuickBooks. I just shared the link about the 30-day trial, but I don't know if you have a
No, I
promo
don't.
code.
I don't. I'm not a certified. I'm not certified with QuickBooks as a trainer for them.
Mhm.
Okay, frankly they want a lot of money for it, and I just wasn't interested in doing it. It used to have some value, and the promo codes are only good for a short period of time anyway. So no, and and QuickBooks is great, and I think Quick is great, but Zoho is also another one. Zero is another one. You might want to look at them. I do think that QuickBooks still is top of the pile. They're just really doing the best job, and despite their cost. So no, I don't have a promo code. I just have the link to do the test drive.
And then for the interest of time, because we're like, there's just one last question. So when you are paying the business credit card, do you say it is expenses and then refer to the actual individual charges to categorize correctly in books?
No. So great question. One of your accounts on your chart of accounts is going to be a credit card on the balance sheet side. all of the transactions that you have in your credit card will show up and populate as an expense on your profit and loss report. When you make the payment, you're only making the payment. It goes directly from your cash account, reduces the amount of cash that you have, and it reduces the amount that you owe on the credit card. So the double entry for that payment is your bank account and your credit card. When you're posting in your credit card, you're increasing what you owe to the credit card, but you're also showing it as an expense on your profit and loss. And it is probably the only type of transaction that I can think of that functions in both accrual and cash basis, because credit card transactions are considered money spent in the moment that that card transaction occurs. It's the only one that does that. Even if you haven't paid for it yet, they're saying basically you're on the hook to pay for it. It's showing up as a liability. So on accrual basis and cash basis accounting, when you run your profit and loss report, everything on your credit card will show up both under accrual report and a cash basis report. I'm really glad you asked that question, because it gave me a chance to answer that. It's one of those little weirdnesses that go, oh, how does that work? So when you're making the payment, that does not show up on your expense side. When you posted the transaction is when it shows up on your expense side. Great
Okay.
question.
So with that, I'd like to thank everyone for joining today's webinar. Remind you again that we're going to meet this Thursday at 1 o'clock. As I mentioned in the very beginning, today's webinar is being recorded. We encourage you to fill out the a survey at the end when you log off. I do also want to mention that I think it was in January, one of our partners, the name is so long, Makahakama Foundation does provide you with a grant and mentorship to help you put together the structure for your bookkeeping. They're working with us, and I will go ahead and share that. It's just a few hours that they will give you. You get one-on-one with a trainer, and then they give you a grant for completing the training. So I will yeah, so I will share that with all of the attendees, just another resource to help you in this process of learning QuickBooks and just giving you a better handle of it. So with all of that, I just want to give a big thank you to Lorna Whitaker, our guest
My
speaker.
pleasure.
She's always great. She gives us a lot of expertise and practical strategies to handle QuickBooks and just in general business finances. Okay, so I look forward to seeing everyone this Thursday. And thank you everyone for joining us, and you have a great rest of your day.
Thank you. Bye-bye, everyone.